Hello and welcome to our market alert video for today, which is a big day. We're going to get the drop on the inflation CPI numbers, and it's a huge moment for the markets and all investors involved. I am the CEO of Retirement Planners of America and the founder, and we're a firm that specializes in retirement planning. We work with people who are over 50, who are retired or retiring soon. And so one of the most important things to us is we believe that protecting your money is super important. So I want to go into the inflation numbers with you here. They're going to drop in a few minutes. I'm going to go into in the room there and watch the computer. But before that, I want to share with you something that hopefully will save you and protect your money. And that is, don't ever trust a hotel safe again. Okay, I'm going to hopefully show you how it is so easy to break into the quote unquote safe at your hotel. Okay, so I'm going to give you a demonstration here of what happens. So here's the safe. All right, and what I'm going to do is I'm going to get this very, very valuable box here. It has millions of dollars in it, and so I want to be sure that I keep it safe. So I'm going to put it inside the safe, and then I'm going to follow the instructions that it says you're supposed to do. Right, so you close it, and then it says that you should put in a code. So I'm going to put in 4, 3, 2, 1, and I'm going to hit pound. And now it says that it is locked. Yay! So now I can go out and I can walk around. I'm here in Bordeaux, France right now on vacation, so I can go for a tour and not worry that my $1 million box is going to get robbed. See, look, it's locked. But let me show you how easy it is to actually break into this. So now I'm going to turn into a bad guy. And I'm going to show you how to break into that supposedly safe hotel safe. So what you do is you come over here and you press this button twice, and then you type in the code 0000000, and look what happens. Voila! It opens. And guess what? Now the bad guys can get in and they can take my $1 million box, and it's gone. By the way, if you're wondering what voila means, that's French for ta-da! But hopefully after you watch this, you now know you cannot trust the safe in your hotel room. So let me go over to the computer and let's see what inflation's doing. Okay, so here's the big information drop. We're gonna get the CPI numbers, and I'm gonna kind of watch for it here. It's gonna drop in 10, 9, 8, 7, 6, 5, 4, 3, 2, and there it dropped. And the numbers look like, so inflation came in at 3.4%, which is exactly what the market was expecting. And so that's very good news. And actually, you know, now that we see this, it looks like this is the third print in a row where we've had the inflation numbers come in line, and also we've had jobs and consumer confidence all come in line. So this is the third report in a row. Looks like the market is probably going to like this. As I look at it right now, we've had the futures have spiked. So the market's liking it so far. Interest rates have dropped, which is good for the bond market. So let me analyze this for you for just a minute, and I'll be right back.
A few moments later.
So I've reviewed the numbers, what's behind this inflation print, and it looks like that, as I said, this is the third report in a row for jobs, inflation, consumer confidence, and the numbers are not getting worse. So that's a very positive sign, and that's going to be well received by the market, we believe. The initial response, which sometimes is wrong right now, is very positive with the futures. The other thing also is that it appears now that there's going to be, in our view, a rising confidence that the Fed is actually going to lower interest rates this year after all. There was some concern that they wouldn't, and so that's going to be a very positive thing. So right now it looks like the target might be actually that the interest rate on the 10-year, which is what drives bond prices, may come down all the way to 3.5% by the end of this year. If that's the case, then what we've been saying all along here this year is that bonds should have a phenomenal rally. The aggregate bond index, if you look at historical precedent, which doesn't guarantee the future, obviously, has resulted in a 10% increase in a 1% drop. That would be about a 1% drop in the 10-year, which would result in an aggregate bond potentially rising by 10%. So we're looking for a big rally in bonds. And there's no recession in sight right now, so that bodes well for profits. And as you guys know, we believe that profits drive stock prices. And as long as profits are not scared of interest rates, companies are not pulling back because the Fed's not our enemy now, that should bode well for profits as well. So a very good inflation print for today. Sounds excellent. We are very, very optimistic. But as you know, we always want to make sure that we have our sell strategy, our invest and protect strategy in place, because anything can happen. Suddenly, things can change in the blink of an eye. You know that. It's happened many times before. And so having a strategy to protect against the downside is extremely important in our view, especially if you're over 50, if you are retired or retiring soon, which is where we like to work with. So thank you for watching this video. I hope you enjoyed it, and you will never again have your money put or anything valuable in a hotel safe after what you saw, right? So thank you for watching this video, and we'll talk soon.